RSI Momentum Strategy. Hey guys, and welcome back to an exclusively new video on my channel Tradingfyive. And in this video, we are going to discuss about an indicator, in fact a very powerful indicator which is called as the RSI. You know, RSI is an indicator which is used to identify the momentum in the market. Now, momentum means speed of the market. For example, if I say you are driving a car or any other vehicle and you have an indicator in front of you which is called as the speedometer. This speedometer will tell you the speed of the car that you are driving. And similarly, the market also has its own speedometer which is called as the momentum indicator. And you know, I have already made a video on indicator wherein I have explained what is indicator, what are the types of indicator, how can you use them together. And if you have not yet watched this video, the link will be flashing above or you can check out the description. So before continuing with this video, let me tell you that if you are new to this channel or not yet subscribed to this channel, make sure that you do it so that you won't miss any upcoming videos and updates on stock market and technical analysis. Alright, so let's start with this video and let us first understand what is RSI. You see, RSI is a type of indicator that oscillates between 0 and 100. That means this indicator moves between 0 and 100 and it cannot go below 0 or pass above 100. And by understanding different levels of RSI, or you can say different zones of RSI, you can analyze whether the momentum in the market is bullish or bearish. And let me tell you that there are two ways to understand RSI. The first is the 70-30 method, which is basically a conventional way of using RSI. And the next one is the 60-40 method, which is like an unconventional way to trade using RSI. So in this video, we will understand both of these ways and we will figure out which one is best and which method you must be trading. So first let us look at the 70-30 method. So in this method, we use a band inside the oscillator and it originates from 30 and goes up till 70. And you know, the area above this band is called as the overbought zone. That means at this point, the market has already become a lot bullish and we can expect a reversal from here. And the area that you see below 30 is called as the oversold zone. That means the market in this zone has already become too much bearish and we can expect a bullish reversal over here. So it is like when the market reverses from the overbought zone, you sell the stock. And when the market becomes oversold, you again buy it. But let me tell you that this method of trading RSI is completely wrong. Because you see, when the market is actually overbought, what we get to understand is that the number of bulls in the market are very high. That means the market is still running in uptrend. And what we are actually doing here is that we are trying to sell in an uptrend. And when the market actually becomes oversold, we are trying to buy in a downtrend, which is not the correct ethics of trading. When the market is in uptrend, you have to buy the stock, and in a downtrend, you actually sell the stock. And that is why this method doesn't work anymore. Instead, we use the second method, which is called as the 60-40. And in this method, we use a band of RSI, which originates from 40 and goes up till 60. And you can see the area above 60. Whenever the market is oscillating in this area, it is said to be as the bullish market. And whenever the RSI line goes below 40, we can assume that the market is bearish. And at the time when the market is in 60-40 range, it is said to be as the sideways market. And some people also called it as the no trading zone of the market. And so as you can see on the screen, that is the RSI line. And in whichever zone the market is moving, we can predict how bullish or bearish the market actually is. And we can understand the momentum of the market. So the strategy to trade on RSI is somewhat like this. When the price crosses 60, we will buy the stock. Because when the price crosses the 60 RSI level, it indicates that the stock is going from sideways to uptrend. That means the price is becoming bullish, we got to buy the stock. And for exiting the stock, what we can do is, we can use a trailing stop loss for booking the profits, or we can use a risk reward ratio to get a perfect exit from the trade. And if you want to take a short trade using RSI, you can see when the price crosses below 40 level, you sell the stock, you take a short entry and exit by same method by either using a trailing stop loss or a risk to reward ratio of 1:3 or 1:5. Alright, but let me tell you that you cannot trade on RSI alone. We use RSI as an additional confirmation for the price action. Like if there is some pattern forming or if there is a breakout or some change in polarity, we can trade that opportunity by taking an extra confirmation from RSI. Let me show you with some example how it's actually done. So as you can see on the screen, this is the daily chart of the stock named ITC. And at the bottom, we are using the RSI 60-40. And this is like the past data of the stock that I am using. These are actually the trades which I did using price action and RSI. So first you can see this stock was going sideways and was taking a strong resistance over this line. But exactly over here the price gives a breakout. So now you know if the price is giving a breakout from a resistance, we can expect that the price may go in an uptrend. And this was actually confirmed by the RSI, as you can see over here. The RSI crossed above 60 and the price actually broke the resistance. So it was like a good buying opportunity for us. So we entered the trade and we made a very good return out of it. So that is what I mean when I say we must use RSI along with some price action to make a very perfect trade. Let me show you one more trade. This is the daily chart of the stock named Jindal Saw, and you can see the price actually gave a breakout through this resistance. But before that the RSI confirmed us about the bullishness in the market. So we can take a trade here and we got very bullish move in the market because we analyzed the momentum is going to be bullish along with price. So that is how you trade using a momentum indicator, which is RSI. And this concept of 60-40 is a very basic concept in RSI. There are more concepts like divergence, reverse divergence or hidden divergence with this indicator. But these are like advanced stuff. In some of my next videos, I will cover about the you can practice this strategy, backtest it on the chart and first start paper trading. And once you get a proper confidence, you can trade in the market by using this strategy along with proper risk management. Alright, so lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible. And do not miss such many content on the stock market, technical analysis and trading. Make sure that you subscribe to this channel and press the notification bell. Alright, and I will see you in the next video.